Today let us discuss about balance of payment and economic transactions. Balance of payment is an accounting statement that provides a systematic record of all economic transactions between the residents of a country and the rest of the world. So here certain things we need to understand, that is, balance of payment is a accounting statement. Then it contains systematic record of all economic transactions. What are these economic transactions? That I will explain you. So it is a systematic record of all economic transactions. Then these economic transactions are taking place between the residents of the country and the rest of the world. So here, before going to economic transactions, we need to understand imports and exports. When we export our goods to other countries, we receive foreign exchange. We get foreign payment. And when we import goods from other countries, we have to make the payment. We have to make the payment in foreign exchange. That is why it is always said that imports should be always less than exports. You should be able to export more goods to other countries than what you are importing from other countries, because that is a favorable condition for any economy. That condition makes the economy stronger. That condition makes the economy strong. So always the country should try to increase the exports, or rather the imports should be less than the exports. Then why the countries go for exports and imports? Why we import goods from other countries? Because you see, in any country, it is not possible to produce all the commodities what we require, because the resources may not be available. The technology what is available in the country may not be sufficient enough to produce that goods at a less cost. So one country depend on other country for certain necessities. They import goods from other countries because of this reason. So always there is international trade. This is what is called international trade. That is imports and exports. Of course, that is a must. To meet the needs of the people, to meet the needs of the economy, the country must import whatever it is not possible to produce in that country from other countries. So we cannot say that imports should be stopped, but imports can be reduced. That is very important. So now we come to economic transactions. When we come to these economic transactions, what are included in balance of payment? These economic transactions are classified into 4 types. The first constituent is visible items. All the goods, what we can touch, what we can see, what we can use, all tangible items come under your visible items. So we export visible items to different countries. We also import visible items from different countries. So the first category is visible items. The second thing is invisible items. All the services like insurance, banking, transportation, all these services, that is intangible items, are included in this your invisible items. They cannot be seen, they cannot be touched, they cannot breathe, they cannot run. So these are called invisible items. So we also export and we also import, we also buy, we also sell services. So they are also included in this balance of payment. The third constituent is your unilateral transfers. When I say unilateral means one-sided. Uni means one and unilateral means one-sided. These are one-sided transfers. Maybe the money is received or maybe the money is paid, but these are only one-sided. So like old age pension, scholarships, unemployment allowance. All these are given by the government to the people. So these are called unilateral transfers. In return for that payment, you are not doing anything. You are not rendering any service to the government. In the same way, we receive certain gifts, grants from other countries. So they also come under the category of unilateral transfers. This is also one important constituent of balance of payment, because such transactions take place between different countries of the world. They help each other. Sometimes these transfers are done without expecting anything. Everything is not purchased and sold. The countries help each other. Then this kind of transfers, what are done, are called unilateral transfers. Then the fourth constituent is your capital transfers. This capital transfer means, here again we will talk about capital receipt and capital payment. So capital receipt, when you borrow a big amount of money from some other country, you are taking a loan, or you are selling an asset, then you are getting a big amount of capital, receiving a big amount of capital. Then that is called your capital receipt. In the same way, when you give a big amount of loan to some other country, or when you purchase an asset, then you are making a payment, big amount. That is called your capital payment. So this comes under your capital transfer. That can be capital receipt or that can be capital payment. Both these things are included in capital transfer. So as I told you, there are four constituents in balance of payment. A systematic record of all these transactions is maintained in balance of payment, and that systematic record is called BOP, that is balance of payments.